Hello everyone. Welcome to the Stock Minds web channel. Sezzle, Nasdaq SEZL, has emerged as a standout performer in the Fintech sector, particularly within the Buy Now, Pay Later (BNPL) industry. With its impressive Q1 2025 earnings, the company has demonstrated significant growth and value, making it an attractive option for investors seeking exposure to innovative financial services. In this video, we will dive into Sezzle recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Sezzle. Founded in 2016 and headquartered in Minneapolis, Minnesota, Sezzle is a financial technology company operating primarily in the United States and Canada. The company offers a digital payments platform that provides interest-free installment plans, allowing consumers to split their purchases into multiple payments over time. Sezzle had over 2.7 million active consumers and more than 23,000 participating merchants, including major retailers like Amazon, Walmart, and Target. Sezzle financial performance. Sezzle's Q1 2025 financial results demonstrated impressive growth across several key metrics. The company reported revenue of $104.91 million for the quarter, marking a significant 123.32% increase compared to $46.98 million in Q1 2024. Earnings per share, EPS, also surged, reaching $1, an increase of 354.55% from 22 cents in the same quarter last year. On a trailing 12 months TTM basis, Sezzle's revenue stood at $329.06 million, reflecting a 91.69% rise from $171.66 million in Q1 2024, while EPS soared to $2.97, representing a remarkable 677.39% increase from 38 cents. The company's free cash flow per share over the TTM period also grew substantially to $1.70, up 246.94% from 49 cents in Q1 2024. Profitability metrics remained robust, with a gross profit margin of 66.36%, a net profit margin of 32.42%, and a free cash flow margin of 18.55%. Additionally, Sezzle reported a strong return on assets of 45.83%, and an outstanding return on equity of 137.32%, supported by a conservative debt-to-equity ratio of 0.56. Over the past 5 years, the company has been growing its revenue at a 50% CAGR, while net income and free cash flow have been growing rapidly over the past year and continuing to do so. Sezzle 2025 Financial Forecast. Looking ahead, analysts forecast continued momentum, projecting 2025 revenue of $438.41 million, an increase of 61.7% over 2024's $271.13 million, and a non-GAAP EPS of $3.24, representing a 75.77% rise from the previous year's $1.84. The average of analysts have set a price target of $90.50, with a buy rating suggesting a potential downside of 8.69% from the current price. Sezzle stock has already gained high this year, and I think analysts are still cautious about increasing the price target. SEZL stock price performance and valuation. At the time this video was created, Sezzle stock was trading at $99.11. Over the past year, Sezzle stock has gained an impressive 675.61%, significantly outperforming the S&P 500, which rose by only 9.7% during the same period. Since its listing date in August 2023, Sezzle's stock has surged by 633.4%, compared to a 33.5% gain for the S&P 500. When examining valuation metrics, the stock appears reasonably priced relative to its strong growth prospects. Its price-to-sales ratio, TTM, stands at 10.15, while the forward price-to-sales ratio is 7.53. The non-GAAP price-to-earnings, PE ratio, for the trailing 12 months is 38.42, with a forward non-GAAP of 30.6. Additionally, the price-to-free cash flow ratio, TTM, is 54.06. Looking at the valuation since 2024, Sezzle stock is currently trading above the average forward PS of 2.95, and its forward PE is also above the average of 14.86. However, this company is truly a fast-growing business, and the current valuation, though higher than the historical average, this is justified, as Sezzle has been able to grow its revenue rapidly. In the most recent quarter, it reported more than 120% growth, which is very rare for a company. The current valuation is also still more reasonable than that of many tech companies, which often have high PE ratios without growing as fast as Sezzle. So the current valuation is actually still not very high. Sezzle growth potential. Sezzle's growth prospects remain strong, driven by several factors. 1. Margin expansion and operational efficiency. A critical driver of Sezzle's improved profitability is its enhanced operational efficiency. Total operating expenses grew at a much slower rate than revenue, increasing 66.0% year-over-year to $55 million, but declining as a percentage of revenue by 18.2 percentage points to 52.4%. This significant improvement reflects the company's ability to leverage its platform and infrastructure as it grows. Transaction-related costs have also been optimized, declining from 4.3% of GMV to 3.8% year-over-year. This improvement stems from better-than-expected credit performance, more effective payment processing strategies, and reduced interest costs from improved facility terms. The company reported impressive margin metrics across the board, including a robust gross margin of 70.4% and an adjusted EBITDA margin of 49%. 2. User engagement and growth drivers. Sezzle's growth potential is strongly supported by deepening user engagement metrics. Average quarterly purchase frequency increased to a record 6.1 transactions per customer, up from 4.5 in Q1 2024. This 35.6% increase in purchase frequency indicates stronger customer loyalty and higher lifetime value per user, factors that typically correlate with sustainable long-term growth. As of March 31, 2025, Sezzle reported 658,000 monthly on-demand and subscribers, mods, representing 77.4% growth year-over-year. While this figure represents a seasonal decline from 707,000 in Q4 2024 following the holiday shopping period, the strong year-over-year growth confirms that Sezzle continues to attract and retain users effectively. 3. Improved forward outlook and guidance. Perhaps the strongest indicator of Sezzle's growth potential is management's dramatic upward revision of forward guidance. Following the strong Q1 results, Sezzle raised its 2025 net income guidance by nearly 50% to $120 million. The company also upgraded its earnings per share guidance from $2.21 to $3.25 and increased its revenue growth guidance to 60 to 65% for the full year. This substantial guidance increase reflects management's confidence in sustaining business momentum throughout 2025. CEO Charlie Youakim specifically noted that stronger consumer activity and better-than-expected repayment trends propelled quarterly earnings above expectations, contributing to the improved outlook. Risks to consider. While Sezzle presents a compelling investment opportunity, investors should be aware of potential risks. 1. Credit risk. Sezzle assumes full credit risk for consumer purchases made through its platform, meaning the company absorbs all losses resulting from fraud and non-payment. This exposure places Sezzle at significant financial risk due to potential bad debts and repayment defaults by consumers. Credit losses represent a major portion of the company's operating expenses, directly impacting profitability. Recent financial data reveals that provisions for credit losses have increased by 130% year-over-year, indicating a growing risk profile. This rise in credit losses coincides with Sezzle's efforts to expand its consumer base and relax underwriting standards to attract more customers. While these strategies aim to drive growth and market share, they also increase the likelihood of defaults and financial strain. Managing this credit risk is crucial for Sezzle's long-term financial stability and success in the competitive buy now, pay later industry. 2. Competitive and market risks. The buy now, pay later BNPL sector is highly competitive, with established players such as Afterpay, Affirm, and Klarna dominating the market. Sezzle holds a relatively modest market share of approximately 2.7% in the United States, which highlights the challenge it faces in gaining significant traction against larger competitors. This intense competition puts pressure on Sezzle's profit margins and limits its growth potential, as it must continuously innovate and invest to attract and retain customers. Additionally, Sezzle's efforts to expand internationally introduce further risks, including navigating unfamiliar regulatory landscapes and achieving market acceptance in diverse regions. Differences in consumer behavior, legal requirements, and competitive dynamics abroad may slow expansion or increase costs. Successfully managing these competitive and market risks is essential for Sezzle to strengthen its position and achieve sustainable growth. 3. Regulatory and compliance risks. Sezzle operates within a complex and highly regulated environment, primarily in the United States and Canada, where it must comply with numerous laws related to lending, consumer finance, and data privacy. These regulations are constantly evolving, requiring the company to adapt its policies and procedures to remain compliant. Increased scrutiny from regulatory bodies, such as the Consumer Financial Protection Bureau, CFPB, heightens the risk of enforcement actions, which could result in substantial fines or costly litigation. Maintaining compliance demands significant operational resources and increases overall costs. Additionally, failure to secure or retain necessary licenses in various jurisdictions could lead to interruptions or restrictions in Sezzle's ability to conduct business. Therefore, regulatory and compliance risks represent a critical challenge that could adversely affect Sezzle's operations, reputation, and financial performance if not carefully managed. Conclusion: Sezzle has demonstrated exceptional growth and financial strength in Q1 2025, outperforming market expectations and peers. With a solid business model, strong financial performance, and a growing market, the company is poised for continued success. While investors should remain mindful of potential risks, Sezzle's impressive performance and growth trajectory make it a compelling addition to a diversified investment portfolio. But remember, this is not a financial advice. What do you think about Sezzle? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.